Hi, and welcome to the Stock Scores Market Minutes for January 30th, 2017. This week, I'm going to look at the 6 simple concepts for analysis, then do my market analysis using many of those 6 concepts. And then finally, I'll talk about the trade of the week on Methanex. All right, so what are the 6 concepts for analysis? When I am looking at charts, I really don't do anything more than these 6 things: support, resistance, optimism, pessimism, price volatility, and abnormal activity. You can analyze any stock, option, currency, commodity, anything that trades, and you can get a chart on it. You can get a sense of where that trend is likely to go if you understand these 6 things really well. So let's look at a chart and try to see them in the actual chart. Now, resistance, simply a ceiling price. Anytime the stock has hit a ceiling, we can draw a horizontal line and call that resistance. Support, anywhere that the market has consistently bounced off of, is support. Optimism, if you have rising bottoms from left to right, you have optimism. If you have falling tops from left to right, you have pessimism. Price volatility is understanding that when you move from a lot of volatility like you have there into sideways trading ranges like we have there, you're moving from high volatility to low volatility. The market is coming to some agreement about what a company is worth. You can see here again, low volatility here after a period of high volatility prior to it. And finally, abnormal activity happens when there is price movement with volume that stands out on the chart. You can see here, volume quite high, and the price action stands out, particularly in this day, relative to that chart. So those are the things that I use when I'm analyzing charts, and putting them all together, you can begin to build patterns. All of those things are taught in the foundation course on stockscores.com. So if you have the desire to learn more about how these 6 things work together to define predictive chart patterns, you can go to the Stock Scores Education Center and learn all about that. All right, let's do this week's analysis. This is the 30-day 60-minute chart, and you can see that we've got rising bottoms from left to right. Therefore, we have optimism. We are in an upward trend. Now, the last few days were quite quiet. You can see volume was very low, and that is a difficult environment to trade in. So although the trend is bullish, the buyer enthusiasm really went away. Now, we are some distance up from the upward trend line, so it would not surprise me if short term we pulled back a little bit, but we cannot argue with the fact that the trend is moving up from left to right, and therefore it is a bullish trend. We can say the same thing on the weekly chart. Again, rising bottoms from left to right, we have optimism. We are essentially in an upward sloping channel, not at the top of the channel. This week we broke out of the range, and so we should continue higher, but is it going to happen this week, or is it going to take 3 or 4 weeks until it gets going? This is a longer term chart, so it's difficult to pinpoint the timing when you look at this time frame. It wouldn't surprise me if we pulled back a little bit this week before ultimately continuing higher. What you want to watch for if you're thinking about exiting the market and staying away from a correction is look for the market to break that upward trend line. We've tested it a number of times. As long as we don't break that upward trend line, I would stay bullish on U.S. stocks. On the small cap market, this is the Russell 2000, and I've chosen a daily chart time frame here, and you can see what is making trading in these small cap stocks difficult. That market has been stuck in a quiet sideways range, still below resistance. Had a little bit of life last week, but we're still stuck below resistance. So although this chart is bullish long term because we have rising bottoms on the chart, it's a little bit of a dead market, and some might call it a parking lot, where it's difficult to gain momentum to the upside. Canadian market on the 30-day, 60-minute time frame, again, rising bottoms from left to right, so we have optimism. We had a little bit of a pullback the last few days, pretty reasonable. Why? Because the market came up to the top of the channel and it got stuck, and it pulls back to the bottom of the channel before bouncing. As long as it doesn't penetrate and break down through the bottom of the channel, this remains a bullish chart in the short term. Longer term, we are in a nice upward trend line, very clean, maybe a little overextended as we've touched the top of that. So wouldn't surprise me if we pulled back like that. But again, until that longer term upward trend line is broken, stay bullish on Canadian stocks. TSX Venture has really improved over the last month. Of course, we were in pullback mode there for a number of months. We broke that. Now we've built a rising bottom here. That is our first sign of optimism because we've gone from this low to now a rising bottom. That's a good thing. And we're breaking out of that rising bottom. We're going to ultimately get stuck at resistance up here. So there's not considerable upside for the TSX Venture. And remember, the TSX Venture is a very much an alpha market where there's individual stocks doing their thing, but at least the optimism is there because many of the sectors in the TSX Venture have been doing well of late. Here is the 20-year Treasury bond ETF. I normally do this as a weekly chart, but this week I thought I'd do it as a daily just to show that we are in a downward trend on the U.S. bond market. And that means that interest rates have generally been rising. Now, will it hold support and break the downward trend line, or do we come down to support and punch through it? Right now, the momentum is down, so the most likely outcome is probably pausing at support and then breaking down through it, which would mean a further raise in interest rates. I would say that's probably a 65% chance of that happening. 35% chance is we break the downward trend line and move up, which means interest rates start to go back down again. Again, I would peg that at about 35%, primarily because the trend is down. On the US dollar, we have an upward trend line like this, and we're essentially back to it. We've kind of tickled through it a little bit. So is this the start of a reversal in the US dollar? I don't think it's certainly not a concise conclusion to be drawn just yet. We're, haven't made a sharp break. What happens in the next week is going to be quite important. Do we bounce off of this trend line, or after pausing here, which we've done for the last 5 days, do we break down to it, in which case we're going to fall down to this support zone? Gold has benefited from that weakness in the US dollar, but you can see it kind of rolled over this week, breaking this, primarily because the trend, which is a bit of a curve, was hit, right? We rose up to the the downward trend line, got stuck, and broke down. What could happen is we could build a rising bottom and then make a stab at breaking that downward trend line. Watch for a breakthrough 116 on the GLD. But more likely what will happen is we will move back down to support where the market should hold at that point, at least for the short term. So I recommend some caution with gold in the near term until it can break up to the upside through 116. On the oil market, very quiet. We've been stuck in this range for some time. You can see volatility compressing. We're moving into what's called a pennant pattern. The trend into the pennant was up. What we need to see now is a break up to the upside out of the pennant, in which case oil should move higher, but there's no signal that oil is going to move higher. It's really kind of a dead, quiet market. And so I recommend some caution with oil because you get whipsawed a lot on these oil stocks right now because there's no strong trend in oil. Could happen though. Watch for the breakout out of that pennant, in which case you might want to get a little more bullish on oil. Finally, here's the chart of the VIX, which is, of course, our fear index. This tends to go up when there is concern about a correction in the future. And you can see that this is a very short-term chart, 30-day, 60-minute. It's just falling top after falling top. Of course, these things decay in value over time, but it is at its lows and looks likely to continue lower. It tells us that investors are somewhat complacent, and that can come before, before a correction. But until you see a break to the upside, don't get too optimistic about trading the VIX. In fact, stay away from it. All right, so my ratings then, I'm bullish on both time frames for US and Canadian stocks. I think they look good, but I'm also a little worried that they're getting tired, and so we may see some short-term profit taking. Gold, bearish longer term, neutral short term. Oil, neutral on both time frames. While the trends are up, volume is light, and that shows a real lack of commitment by the buyers. Watch the markets closely in the near term for a break of some of those short-term upward trend lines that I've drawn this week, but stay bullish until we get such a break. Gold is running into resistance at that downward trend line. It needs to break from a rising bottom. It's got work to do in that regard, so be cautious with gold right now. Oil is quiet, and fear is at some extreme complacency, which is the only thing that I think the bears can latch onto until we get a break of trend. All right, so finally, my trade of the week. This is a day trade that I did on January 26th, which I guess was Thursday. And you can see we had a break to the upside. That's what catches my attention, the abnormal strength. And then we go into pullback mode. This is called a falling wedge pattern. And we had a breakout from the falling wedge. That's when I bought. And it ended up doing nicely into the close. All starting, I guess, with this break from a predictive chart pattern, which is one where volatility compresses into a situation where the tops are falling faster than the bottoms. And that's actually a bullish pattern because it shows that the sellers are not as enthusiastic over time. What you ultimately watch for is the break to the upside from the tip of the falling wedge pattern. And it took a little while, it took a few hours before it went, but at the end of the day, it did a nice rally into the close. All right, well, I hope you've liked this week's video. Please subscribe to the channel. Click on the like button if you like it. Tell your friends. Have a great week in the market and trade well.